Sorry, I've just switched over to, let's get rid of that. Go away, that's it. Let's move the chat box out of the way. I've just moved on over onto the Renko Workspace, which is a combination of non-time-based charts and time-based charts. And if you've not used this particular methodology before, it is just it blends everything. In terms of when we're looking at a time-based chart, these are all pretty quick. So down the bottom here, I've got the three indices. I've got the YM, I've got the NQ, and I've got the ES. Now they're all on a 15-second, which is pretty quick. And then at the top, I've actually got the equivalent. I'm just going to check these because with the Renko, what we do is simply choose the time frame. So I'm going to go to 15-second here. So it matches the time at the bottom. So they're in agreement, if you will. Click on that. And that will open the optimal brick size to be trading right now for the YM on a 15-second time-based chart. So we've got the time-based chart below on 15-second, and this is the equivalent up above in terms of Renko. And what the Renko optimizer is doing, it's delivering the optimal brick size if you want to trade at this speed. And what it's saying up here in terms of the 6, this 6 represents 6 points. Because what it will do is it will automatically detect the minimum price movement in terms of that particular contract. So for the YM, it's a point, and for the NQ and the ES, it's in terms of ticks. So if I do the same thing over here, we'll just move this over to a 15-second again. Just that one. Just wait for that to load up. Okay, and that's got 8. So that is in terms of 8 ticks basically. And we'll just do the same over here on 15-second. That's coming up with 3 ticks, so that's moving a lot quicker. Okay, there we go. So now we've got our 3 indices and we're trading on tick. And the beauty of it is that obviously you've got the advantage of trading on time. So if I flick up the time-based chart, you can see exactly where we are. And what it's telling us, with no great surprises, first of all, we're trading around the volume point of control. So we're not expecting anything surprising to happen. And we just have to be patient. We've had a volatility trigger here. We've had some volume come in under that. What are we expecting on this volatility trigger? Well, exactly what we're seeing. We're expecting either congestion or reversal back up and away. Above that, we've got some decent price-based resistance overhead here, which has come into play several times already. You can see it over here. This thick dashed line, that's the accumulation distribution indicator, which is based on price. And that is coming into play right now. And the thicker the line, then the greater is the level of resistance. And you can see down here, we've got some more minor resistance below. Well, it's acting as support and resistance at the moment, flip-flopping around in there. But certainly this is pretty strong resistance. But these levels down here acting as support, you can see were relatively minor. But as we break through that, that becomes obviously support. Now above that, we've got the volume point of control histogram, which extends from the volume point of control itself. And as the volume falls away, then what we're looking for is a region where price is going to move through pretty swiftly, because if we've got low volume, it works in exactly the same way as price-based support and resistance. You can think of volume in precisely the same way. We're all familiar with support and resistance from a price perspective, less so from a volume perspective. And that's what the volume histogram does. And you can see there the price has spiked through it, gone through pretty quickly because there's very little in the way of volume there to hold this market up. So we're looking at a decent breakaway now. The volume is very light. We've got a little bit more resistance that could come into play. This price-based resistance up here. You can see the trend monitor down here has transitioned through to blue. So that's nice and helpful for us. And down the bottom here, I've also brought in another indicator, which is the tick speedometer indicator. Now, if I'm setting a tick chart, I've got them actually over here, but I'm not using it in that way. So this is telling me at the moment, if I was trading on a tick chart, I'd be setting this up to 34 or 36. But I'm not actually doing that at the moment. What I'm using it for is to give me a heads up as to the level of participation in terms of activity. In other words, what I want to see down here is either orange or green, because that is telling me there's lots of activity, lots of participation. What that means is we'll get good price action, which is precisely what we're seeing. We're seeing this nice move develop to the upside. So I've combined it there just to give me a view on what is happening in terms of activity. Now, what's interesting at the moment is when I scan my across, you can see the YM, we've had this little run up on the YM. We've had absolutely nothing on the NQ in terms of, I'll just pop that up full size, had a little bit, but it's coming off again. You know, pretty weak. We've got this very strong level of resistance coming in. You can see here the tick speedometer is giving us a lowdown, if you will, on the activity, which is drained away. You know, it's very low. There's nothing much going on. You know, we're not seeing injections coming in. We're not seeing high volume coming in at the moment. If we move up to the ES, the ES looks a little bit more promising. We've had the trend. We've got the trend monitor. It's supportive. It's starting to move higher. We are in the trend, the tick speedometer here. You can see it's flip-flopping between green and orange. That's good. You know, that's what we want to see all the time. We don't want to see red, because when red comes in, what happens is you will get congestion, you'll get low volume. That is typically the price-volume relationship that you expect to see in congestion phases. Now, what we're seeing on the Renko, pop that up, that little run up, that's reflected in, and bear in mind that, you know, the move from here, 2,600 or 26,000 rather, up to 26, you know, this is 50 points. Well, on a micro contract, it's a handful of dollars. On a $5 contract, it's, you know, a few $100s, and on 25, on the big Dow, it's a lot more. So, you know, these are not insignificant bricks. And what's nice about it, when you have the trend monitor and the trend dots working together in this way, the trend dots on the Renko work fantastically well. What they do is they're supportive here. They go into gray, into a red. That's fine. You know, the market's pulling back a little bit, but what has the trend monitor done? Absolutely nothing. It's continuing to support that move higher. And that's the relationship between the two of them. The trend dots change first, the trend monitor changes second. The trend monitor is a much more considered tool. You can see it coming into play here. We had this very strong rally. The trend dots roll over, they go into red phase, and the trend monitor then transitions and finally goes into red as we start the next leg down. And then we hit this very strong level of price support on the accumulation distribution indicator, which came into play here, provided the platform. We had a couple of pivots below as well, which is great, and up we go. Now we're testing this level at 26,050. If we get through 26,050, you know, we should be on to the next leg higher. So it's combining the indicators, it's combining volume price analysis, it's combining time-based charts with non-time-based charts, and also looking across the related markets, just seeing what is going on. And this is what I mean when you pop this up, you know, you're looking at this, you know, this has no trend whatsoever. Now, if you're trading the YM and you're looking at this, you know, this is very sluggish. This may well follow in due course, but look at the amount of red that's coming in. You know, there's no green in here. It's all red. There's a little bit of orange, back to red again. You know, there's no participation in that particular index. So, you know, does that mean that other indices are going to roar? Probably not. It's going to be sluggish. It's going to be tight trading. It's putting it all together in that sense. Now, if you're a scalping trader, that's fine. You know what it's like. You're jumping in and out the whole time, literally for seconds sometimes, for minutes. You know, 5 minutes might be a long time for a scalping trade. It probably is. You know, you're trading 10s, 20s. Some traders even trade 100 times a day and more. You know, that's the nature of scalping. Doesn't suit everybody. You know, we do it from time to time because we enjoy it. We run off the 15-second chart and faster because it keeps you sharp, and it's fun. I don't like to use the word, but it is. We enjoy it, and it's a fun way to trade and make money, but doesn't suit everybody. Can I pass back to you?